The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Steve Sedgwick and Juliana Tattelbaum. These are your headlines. Fed Governor Austan Goolsbee says the removal of central bank independence would see inflation roaring back, while the IMF's managing director throws her support behind Jerome Powell, even as the US administration continues its criticism.
They've got plenty of room to cut rates. They've got the room to cut rates, and that's what Donald Trump talks about. Don't make it so when we're winning, the Fed thinks you got to be a loser. That's just not true.
European equities notch yet another record high in Thursday trade as blockbuster earnings from TSMC send European chip names higher, putting the tech subindex at levels last seen at the start of the century.
And a US delegation prepares to meet the Danish Prime Minister Mette Frederiksen to discuss Greenland today as the island's Minister for Business and Mineral Resources sets out its position.
We feel betrayed. We are allies of the US, and of course we are bewildered that now I have to have a press conference discussing a possible annexation or selling of Greenland. So for us, this is not something we sought. This is not something I think we deserved.
A very good morning to you and welcome to the show. Great to see you both this morning.
Good morning. This is your last one for a while, I believe.
Yeah, last one where we're all going to be in studio together for a while, for some time anyway.
A few months at least.
At least a few months. Well, I'll be in touch in the next couple of weeks. Yeah, see how things are going.
The question is what changes in any absence?
But I think a lot is poised to change, whether it be what's happening with me in my personal life or what's happening around the world. And yesterday we were sitting here talking about the situation at the Fed and President Trump's latest attacks on Jerome Powell, and both of you raised the comparison to Turkey in the last couple of days. And now you've got the Fed's Austan Goolsbee weighing in, making the same comparison, but saying basically, yes, we've seen this kind of pressure before, but it's not in advanced economies like the US. It's usually in Russia, Zimbabwe, or Turkey. This is not the kind of pressure that you're used to seeing or that's comfortable to see in a place like the United States.
I think you've got a lot of commentary coming out now. We've got Kristalina Georgieva over the IMF responding. You've had Janet Yellen also talking last 24 hours. What came out to me, I was looking at a piece in the Wall Street Journal this morning, really great talking points, suggesting that almost it's a poison chalice now, whoever takes over at the Fed, because there's this pressure campaign about lowering interest rates, but it could come with the backing now of the Justice Department. Not lowering interest rates, if you're in that position, doesn't mean then you're going to be subject to some sort of probe as well by the Justice Department down the track. So that's a sort of different liability in the sense for any incoming Fed chair. The other point is that I think you've had a number of days in DC on the Hill for those Republicans and Democrats not happy with the pushback around Fed independence, and they're looking at leaning very heavily against any Trump candidate put forward. The question now is whether the more independent candidate, Christopher Waller, is soaring to the top of the list because the two Kevins might get significant pushback in any hearings on the Hill. So that's also come through. The other point here is that I think the credibility, and this is something Janet Yellen was talking about, the credibility of any incoming Fed chair has almost been undermined by the president already before any appointment, because he's suggesting that somebody needs to play ball in terms of lowering interest rates. So it really destroys the credibility of any candidate from here.
All of the above. Look, despite what Howard Lutnick thinks, and it was an extraordinary bite in the headline, and we're going to play more of his sound as well, saying they got plenty of room to cut rates. Actually, I prefer to listen to what Goolsbee has to say. And so if you cut the independence and you cut rates too quickly, you potentially got a problem. I'm evidence-based. I just want to look at the evidence. Look at the evidence. The evidence is that the jobs market feels like it's weakening a little bit, yeah, potentially. But the evidence is that the initial jobless claims yesterday fell to 198,000, beating expectations of 215 and down from the previous week. There is no precipitous decline in the US jobs market. Combine that with productivity improving, combine that with GDP really robust. Combine that with stunning numbers from the banking sector, which kind of feeds into the US corporate and consumer situation in the States as well, and inflation at 2.6%. It's like, I know what you want, Howard Lutnick. I know what you want, Donald Trump. But the fact of the matter is you've got a really good economy at the moment. Why would you want to ruin it and potentially ruin the long end of the market by damaging the credibility of the Federal Reserve? The fact is, at the moment, lower rates, this is what they don't seem to understand. Rates are held lower at the longer end because people believe in the longer term credibility of the central bank. They're not where they are in spite of where rates are. They're where they are because of where rates are. And it's the relationship, and Howard Lutnick knows this as well. But I don't know why he doesn't say where the long end is because of the credibility of the central bank, not in spite of where rates are.
To your first point, what we're seeing in terms of the data, that's where the tension could come through. It's going to be almost easier if the data were weakening, and then you've got this motivation for the Fed to also be lowering. The data, the motivation to lower, it would be seamless. But if you've got the tension, the data is stronger, more resilient, not setting the scene for more rate reductions this year, the sort of two that's in the marketplace or more that President Trump wants, that's when the tension could really flare up over at the Federal Reserve this year.
I think also when it comes to the impact lower rates may have on the economy, when you talk about the resilience of the U.S. economy right now, the labor market that it's holding up okay so far, it's really a low hire, low fire environment. And you have to think about the underlying reasons for that and to what extent lower rates will actually change the picture. If a big part of the reason is because of companies investing in artificial intelligence and uncertainty around the type of labor force they're going to need moving forward, are lower rates really going to change that picture? They've also got the immigration piece here as a big factor in what's driving the labor market. So yes, lower rates will have an impact on the housing market and unlocking demand there potentially. But when it comes to the labor market, it's unclear how impactful lower rates will actually be.
Yeah, it's ironic, isn't it, that immigration policy, Trump's own policy, is what's been impacting the labor market. But let's push on to the data. US jobless claims fell to 198,000 for the week of January 10. Coming in below expectations of 215,000 and the lowest level since November 29. Commerce Secretary Howard Lutnick said the data could provide the impetus the Fed needs to lower rates.
They've got plenty of room to cut rates. They've got the room to cut rates, and that's what Donald Trump talks about. Don't make it so when we're winning, the Fed thinks you got to be a loser. That's just not true. Donald Trump understands if there's not inflation, the greatest economy in the world, doesn't have to have the highest interest rates in the world. It's ridiculous that we're in the 4s and everyone else in the world is in the 2s.
IMF Managing Director Kristalina Georgieva has thrown her support behind Fed Chair Jerome Powell, telling Reuters that his standing among his colleagues tells the story. Powell is under investigation by the Department of Justice for alleged cost overruns on the renovation of Fed buildings, which comes on the heels of steady criticism from President Trump for the central bank's policy. Georgieva described the Fed as precious for Americans and important for the rest of the world. Speaking to our U.S. colleagues, Chicago Fed President Austan Goolsbee conceded some criticism for the central bank was warranted.
I think the Fed deserves blame for moving too slowly, and it's the Fed's job to get inflation back to 2%.
Let's get you a check on U.S. markets. Yesterday, we saw a bit of a recovery in the U.S. indices after retreating in the previous session. We've got green across the board, fairly contained in terms of the moves higher, but a positive session nevertheless. 7 out of 11 sectors were positive in yesterday's trade, led by utilities, which gained about 1%. Energy was the laggard, pulling back by about 0.9%. In the Asian session overnight, we are seeing a bit of a retreat as well. You've got the Nikkei 225 off about 0.33%. A little bit of a pullback in the Hong Kong market and in mainland China, while the Kospi over in Korea bucking the trend, gaining another 0.9% after yesterday's strong move higher as well. Now, in terms of the European session, yesterday we saw a major rally in European tech. The chip makers in particular, given a boost by the TSMC earnings overnight in Asia in the previous session, and that drove the overall benchmark stock 600 higher by about 0.5%, the fourth positive session in 5. Now we are similarly looking at a little bit of a retreat here in Europe as well. So similar story when you look around the globe this morning. As far as U.S. futures are concerned, you are looking meantime at further gains there. So we're looking at a further rally. NASDAQ looking at over 100 points at this stage. The Dow almost 100 points, and the S&P also looking to open higher. So Asia and Europe down, but the U.S. looking at a brighter start.
Let's ask a brilliant mind about this from a different point of view. She's a brilliant mind because it's late on a Thursday evening as well, and she's still lucid. Nomi Prinz is founder of Prinsight Global as well in LA. Nomi, lovely to see you. Hey, let me start the conversation. To see you. And always going to learn something from our conversation. So let me ask you a different question. What is wrong with the US economy at the moment that it needs to be juiced by aggressive cutting of the interest rates?
That's a great question. The jobs market, which is you could obviously we had decent claims numbers just come out right now. The December report was weak. It only showed the 50,000 jobs up. It put the full year at an increase of about 584,000 jobs, which is the worst since COVID. It's not like the U.S. hasn't had worse numbers, but in terms of looking at where there is weakness, there is still weakness. And at a 4.4% unemployment with participation going down in the labor force, which is a part of that, that's actually higher than it was before COVID when rates were basically at 1.5% in the first squabble during Trump 1 versus Powell, the beginning of his term, which started with Trump's appointment of him. So we do see that as a weakness. In terms of inflation, that's not. I mean, at 2.7% to close the year on CPI, that's pretty solidly what we've had all year. It's not growing massively above that. It's not going down to the 2% that the Fed would like, that Ben Bernanke actually put in place in 2012. So those are the things that are happening. Growth is high, adjusted for inflation. It's average relative to the last 2 decades. So the U.S. is doing okay. It's not doing massively great, and the labor market is weakening. It did weaken into the end of last year, and we could see those numbers continue to weaken, and we'll see more data of that coming in January. So those are things that are happening. The bigger thing is the risk of how the U.S. looks, I think, relative to other countries. You know, you were talking about that a little bit earlier as well, and in other segments. There's a lot of instability still on foreign policy. And I think that's where the U.S. Has a lot of risk ahead of it.
I mean, let me pick up on that point, because I was discussing one of the angles this morning that the role of the Fed chair has become so politically charged that if you don't lower interest rates, you could be facing some sort of criminal charge down the track. You can see why other central banks have hit back for sort of precedent that may set in other jurisdictions around the world. Just weigh in on the optics of that.
Well, exactly, because on the one hand, Donald Trump is saying that he didn't know about the investigation, but actually it's his Department of Justice. It's in the branch that basically is controlled, or specifically through the White House, and so it is not clear that he didn't know. He can't not know. He's been after Powell to adjust rates downward more rapidly since he got into office, and the Fed didn't move fast enough for his liking, and he's been very vocal about it. And he was vocal about it the first time, and the parallels of the first time that he was in office and Powell was in office was that he wasn't basically in charge of investigations, the low-hanging fruit of a $2.5 billion renovation, perhaps. But some of the ways in which he was attacking Powell and attacking the Fed for not lowering rates at the time fast enough, and this go around fast enough, is definitely a knock on the independence. And the Fed was created as an independent body. I mean, yes, it is situated in Washington. Yes, the president appoints the head of the Fed, as he did Powell. And yes, the Senate then has to confirm by a majority vote, which right now is a Republican Senate. So there are political leanings, but the independence on monetary policy has been a tenet of the Fed since the Federal Reserve Act of 1913, and through multiple issues. And so there is a problem with it. There is a problem with the Fed not being able to carry out monetary policy in an independent fashion. And it's not surprising, especially after a year of tariffs and after a year of so much geopolitical unrest, and after Venezuela, and in the midst of whatever's happening in Greenland. There's a lot of reasons to worry about a monetary organization which is independent being sort of forced to move one way or the other, perhaps, based on who Trump will appoint next. That said, it's also clear there are political allegiances in Washington that transcend where bodies are, how they've been positioned, and what they're supposed to do. And that's what we're seeing take place right now. When we're going to see it in May, no matter who is appointed.
Yeah. Nomi, you mentioned what's going on in Venezuela, in Greenland. It's been incredible, the pace of headlines coming out of the White House since returning after the holiday break. What do you think is motivating President Trump right now as he spits out all these different policy initiatives, whether it be geopolitical, capping credit card interest rates in the United States? It's just far and wide the initiatives coming out of this White House at the moment. What do you think that he's trying to achieve?
I think he's trying to exert power, and also into the midterms. Into this legacy that he's trying to establish. In terms of there's two different things. In terms of the geopolitics and the positioning in the world, what happened in Venezuela, what's happening with respect to Greenland, I think that's much more of a sort of power play with respect to commodities, to natural resources, to securing supply chains in a rapid way using the military as a way to do that. It's kind of reminiscent of what happened in the 50s, 60s, and 70s. But it's more amplified now because a lot of these supply chains have already been secured in a lot of other countries. You know, for example, whether Greenland has rare earth minerals or not, and how much they are, and how much it will cost to actually extract and process them. We're talking about years and years after Trump administration is well over. But he's trying to sort of stake this claim in terms of how the U.S. is positioning itself around the world through him and through that sort of geopolitical legacy. And then with respect to the country, he's trying to gain favor, I think, for going into the midterms and for whomever ultimately succeeds him as the president, because he's making unilateral statements that are actually, some of them are coming across quite positively to consumers, and that's who he's trying to cater favor with. I mean, cutting rates to 10% on credit cards is not going to be something taken negatively by the American public. So a lot of it's also the fanfare of taking that position of power to do those policies.
Well, I would probably disagree on that last point, because if they cut them to 10%, there's a lot of Americans who will find themselves cut off from that credit, Nomi, as you know better than I ever do. You come back on that point as well, but I want to make another point as well. The reason why Donald Trump controls Republican politics and has done for a decade now is because he is seen as an electoral totem, as a winner, as when you get his endorsement, you win in your governorship or whatever it will be, in representatives, in the Senate. If Trump backs you, you win. Now that is being questioned. It's being questioned throughout the country, and his popularity ratings are low. They're not quite in Nixon territory, but as you know, they're low now as well. And there are rumblings, whether it be on defense committees, whether it be on Senate finance oversight, of people actually standing up to Trump within the Republican Party. We don't know how SCOTUS is going to come down on the Lisa Cook stuff, and indeed on the DOJ investigations and the tariffs as well. So there's a lot of rumblings that Trump is losing his grip on power. But what do you think?
Well, that's definitely true. And that's why these positionings and going into Venezuela and taking out the president, talking about acquiring Greenland, whatever that looks like, and having these offensive moves throughout the world. That's a desperate kind of positioning of the power that he wants to continue to project. So yes, there is a lower confidence, and his numbers are that, which is why he's trying to court favor with the public. And also in the wake of the last election, the last election was a referendum that came out negative effectively on the Trump administration. So any assumptions he might have had about or might project as to how his winning requires Republicans to sort of court favor with him in order to have his support in order to win seats. It was a minor midterm election in terms of the states that were involved, but it did show that Democrats actually were achieving more power. And the fear I think he has is that it's going to be a wash in the midterms, and he could potentially lose the House and have the Senate be equal, and then it starts to look much weaker in terms of getting anything through.
Naomi, this is interesting around how close it is to Donald Trump suggesting your fortunes when it comes to the midterms. But when it comes to the Federal Reserve process around the next chair, there's already discussion on the Hill that, look, if you're part of the inner circle of Trump, that could become a negative if the next vote becomes one about the independence of the central bank. And we know there are 4 candidates. There's already suggestion now that being more distant to Trump in the form of Christopher Waller, that could be beneficial for the next candidate. Do you think that is the case as we debate being close to Trump, being more distant from Trump and the fortunes that brings?
Yeah, I think Christopher Waller will come out as a key candidate, as we could see someone from the Treasury Department sort of pop up, which hasn't been necessarily what's happening now, because we do see Scott Bessent on the sort of coattails of Trump, which he is talking about how the Fed hasn't reduced rates enough and trying to figure out all these different bond purchasing programs that the Treasury Department can potentially do as long as we're in a period where the Fed's not doing it and trying to push some sort of QE. I think whoever is the head of the Fed is going to feel this political pressure from the White House and yet try to maintain the office's independence. So I think what we'll see is perhaps not as quickly a reduction in rates. Right now, dot plots at 1 or 2 rate cuts per year. I think we could see 2 or 3 rate cuts, but I do think that whoever it is going to be in the sort of middle road, trying to remain independent and also trying to not, get sued for something or investigated for something. And it's going to be complicated. So I think we'll see different ways the Fed will ease policy beyond rate cuts.
Okay, interesting, Nomi. One thing we haven't mentioned yet, which keeps coming up in conversation I'm having with investors, and that's this outstanding Supreme Court decision on tariffs. We don't know when it's going to come, but how are you thinking about the potential impact of this ruling if the Supreme Court does rule against tariffs? How monumental will that actually be?
The first part of that is why it will be a major pushback against Trump's policies, number one, but also it's going to have a long-term blowback, because what's happened is other countries have already repositioned themselves to trade with each other less than with the United States because of the tariffs. And even when they were dialed back, and down from the sort of more egregious levels, have taken to trade elsewhere. We just saw the record surplus of China come out at the 1.2 trillion figure. China's basically saying, and they were in the headlights really of most of those tariffs or their partners, and they found ways to trade basically around the United States. So I think what can happen is a sort of extension of that, regardless of the decision. But the decision is to not allow those tariffs to go through, or not go through at those high levels, which are still high, but lower than they were when they first came out. I think that's just going to continue the path of other countries finding ways to change their trading strategies and their routes, as they have been doing this entire year. On the one hand, our trade deficit in the United States has declined, but it's not really a positive decline. The White House likes to think this is because of tariffs somehow. It's not really. It's just that there's a lower volume of trade, and I think that's really the overhang that's going to happen from this tariff period.
Indeed. Nomi, a good conversation will make you think about your own stance and everyone else's stance. And I think that's happened to me in Spain. I've been thinking a lot about what you've said, what the Wall Street Journal was saying with Karen. I'm going to come back to that in a minute. But Nomi, lovely to see you. Happy Thursday for you. I can tell you Friday is lovely here. When you get to it, it'll be amazing. Nomi Prince, founder of Prince Light Global. You are a star. Thank you. CNBC is returning to Davos, Switzerland for the World Economic Forum's annual meeting. We're going to hear from top executives and policymakers, including IMF Managing Director Kristalina Georgieva, SAP Chief Executive Christian Klein, the Finnish President Alexander Stubb, who sometimes plays golf, doesn't he, with Trump, German Economic and Affairs and Energy Minister Katharina Reiche, and the European Commission's EVP for Industrial Policy, Stéphane Séjourné. Our coverage across CNBC starts Tuesday. Coming up on the show, Taiwan and the United States strike a trade deal with semiconductors at the center. We'll have the details. Plus, as AWS launches its own sovereign cloud in Germany, Arjun spoke to the CEO about the company's bet on AI, and earnings season is underway, with the market nervously eyeing results from the tech majors. Dan Ives, Wedbush's tech guru, joins us to discuss the outlook at 9:30 GMT. Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's the CEO of the London Stock Exchange Group, Julia Hoggett.
There is no justification whatsoever for not doing the right thing, even if the right thing is hard to do. Which also means that if the context changes or the information changes, it is absolutely fine to also change your mind.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
The US and Taiwan have agreed a trade deal that will cut US tariffs on Taiwanese goods to 15% from 20% now, in exchange for the Taiwanese government guaranteeing $250 billion worth of investment in the US chip industry. The deal also set out quotas for tariff-free chip imports to the US. The Taiwanese government praised the deal, saying the levy put it on a par with those most favoured by the US. US clearly they're wanting to diversify their supply chain. Emily filed this report from Taiwan.
The U.S. has reached a trade deal with Taiwan that is centered around semiconductor manufacturing, building chips and chip factories in the United States. Taiwan will invest $250 billion in production capacity, along with $250 billion in credit guarantees. That's in exchange for 15% tariff. Generic pharmaceuticals, aircraft components, and natural resources will be exempt from duty. Commerce Secretary Howard Lutnick says TSMC has purchased hundreds of acres and that 40% of production will be brought to the U.S. during the Trump administration. Taiwan's Vice Premier Chung Lee-chun says the trade deal will be signed in a few weeks and that more details will come through after her return to Taiwan. She goes on to say that the trade deal is different to that of Japan and Korea's and that the U.S. will increase investment in Taiwan. No timeline has been set for $250 billion in investment in the U.S. by Taiwan companies. Now, I sat down with TSMC CFO Wendell Huang to discuss their earnings and the purchase of a second parcel of land in Arizona. I asked whether the chipmaker needed to build more fabs as part of the U.S. trade deal. He said the trade deal is between two governments and that TSMC is not part of the discussion and that they will continue to invest in Arizona because of customer demand. I'm Emily Tan, reporting in Taipei.
The US only making about 10% of the world's semiconductors at this point, so that comes down to just why there's a motivation for diversification. Now, as we saw in Emily's report, she also spoke to TSMC CFO Wendell Huang and asked him about the demand for newer chips.
Two technologies is very popular. We have very strong demand from our customers, both the smartphone and the HPC customers.
Are you seeing any difference in the current upgrade cycle, in the behavior of customers?
So both the smartphone and the HPC customers are getting in on the first wave of the newest nodes. In the past, normally it's the smartphone customer.